This is the performance summary for week 36 of 2024, which is the week ending on September 6th. Let's start by inputting the beginning and ending balances. One thing to note here is that you may notice the balance on August 30th here is a little different from the balance for August 30th from my previous video from last week. That's because I was trading this strategy in my taxable account, but I decided to trade it in my SEP IRA account going forward. And so that's why it's going to be a little different. But I made sure I transferred in an amount that was very close into my SEP IRA compared to what was in my taxable account. So anyway, the balance in my SEP IRA account on August 30th was $28,079. And the ending balance was $27,079 on September 6th. So I lost about $1,000 last week, which was a loss of 3.56%. Now let's input the theoretical trades. Here you can go on my website and go to the trade list. And that would be these trades here. Last week, just like the week prior to that, the system only had 3 trades instead of the usual 5. So let's look at these individual trades now. So we had CRM, Meta, and Nvidia. First one is CRM, Salesforce. So we entered here on Tuesday morning, the day after Labor Day, and we exited here. And that was a loss of 3.42%. So that's CRM, and this is CRM over the longer term. Next one is Meta, where we lost 3.73%. So we entered here on Tuesday morning and we exited here on Friday close. And it looks like on Friday the stock of Meta did gap up, went slightly positive for our trade, but the entire market sold off. There was a weak labor market report Friday morning, and that caused the entire US stock market to sell off to a pretty good extent. We're in a phase currently where bad news about the economy is bad for the stock market, which is reverse of what used to be the case. If you recall, in prior quarters, bad news about the economy would make people expect rate cuts, and that was actually a positive thing for the stock market. So this sentiment kind of flips around all the time, but so currently we're in this kind of a sentiment. Okay, the next one is Nvidia. This was quite a bad trade. We lost 11.36%. And this is what the trade looks like. We got in here and it pretty much went down day after day, closed Friday near the low of the trade. And here's Nvidia, still really strong over the long term, but facing a bit of weakness, as many tech stocks are currently. And a subscriber recently asked me why I don't use stop losses. The thought was we could have mitigated some of these losses this week. But I've actually back tested that, and because it's a mean reversion strategy, the stop losses don't work very well. The dynamic here is that when you get into a mean reversion trade, or if you're buying the dip, more often than not, you're going to take some heat in the initial part of the trade. There could be continuation of the sell-off in the stock. But what tends to happen is after that downdraft, it tends to snap back a little later on towards the end of the week. So by putting in a stop loss, you're all but ensuring that you're going to realize the loss and not participate in the snapback upwards. So, weeks like this do happen where the entire stock market's selling off and all the stocks will sell off as well. But that's just part of the nature of the strategy. So let's input the ending balance into my cumulative tab. Okay, so here I was trading the strategy in my taxable account. I've put a comment here up until this point, August 30th. And then I started trading it in my SEP IRA account. And that's what I'm going to be doing going forward. It's going to be only in my SEP IRA account. So I have to make a bit of a manual calculation here. I'm just going to input the actual loss from here and the actual percentage loss here. And then from next week onwards, it'll just be the formula that calculates off of the beginning and ending balance. So it'll be back to normal. So this is what our equity curve looks like as of this past Friday. So we gave back a little bit, but we're still up $1,000 or up 4.08% since we began trading this system at the start of June of this year. So here's the equity curve of the weekly reversion strategy going back to 1994. Let's zoom in over the past 10 years or so. So here we are right here. And zooming in a little bit closer, maybe let's go back to 2021. And this is where we are right now. So that's the performance review for week 36 of 2024. If you'd like to know more about the strategy, feel free to visit my website at returnstream.com. I'm going to put a link to it in the description box below. Thank you for watching.